Hi, I'm Kunka with Remax Elite Realty. I cover the San Gabriel Valley and the greater Los Angeles area. Today I'm here with Dorothy Pang from ACG Funding. We're going to be talking about closing costs. A couple things before we get right into it. A lot of times, the reason why this is an important topic to me is a lot of times buyers think that in addition to just their down payment, there really isn't anything more they have to account for as far as closing costs goes, and that's not true. Closing costs can add another 1 to 2% on top of your purchase price. So depending on the amount you're purchasing, that could be quite significant. So what goes into closing costs, just briefly, it's a variable amount. It's based on your sales price, so that's why we don't have a precise number, but you're going to account for escrow fees, title fees, lending fees, property tax, insurance, recording fees, and possibly some repairs. So Dorothy is going to talk about more specifically what goes into closing costs, what you should ask for when you meet a lender, and how to pay attention to how the fees structure work.
Okay, so under a normal circumstance, lender normally charges for, which we call loan origination fee, is the points. The lender fees would also include underwriting fee and also processing fees.
Okay.
So people would be like, oh, what's points? Like, you always hear that 0 point, 1 point, what does it mean? So 0 point would be, it's actually a percentage. 0 point would be 0%, so they're not charging you any points. 1 point would be 1% of the loan amount.
Okay.
Yes.
So what does it mean when a lender's offering 0 points? Does that mean they're not paying any fees?
Not really. So how we actually get paid is actually from the lender itself. So a lot of times when people come to me and be like, hey, Dorothy, I get this interest rate is actually a lot lower. So I would encourage borrowers out there to look at the full picture. The first thing, don't just look at the interest rate itself. You have to look at what kind of fees you're being charged, right? So if you're getting a lower interest rate, but they're charging you a lot of fees, that's actually kind of, you know,
how they compensate.
Exactly, how they compensate. But first is like, if you're getting a higher interest, but you're not getting charged on points, then you kind of really have to determine which way do you want to go. Like, do you want more out of pocket or less out of pocket?
Okay, oh, that's a good distinction. So if you're seeing a high interest rate, then you might see lower fees. Obviously, it varies from case to case, but usually that's the case. And if you get a really low interest rate, you might be paying higher in fees or something like that. Okay, so what if someone, you know, how does someone determine what's better? What makes more sense? I know it depends on scenario, like couple to couple or person to person, but what would you suggest for someone who's like, man, I really don't like this high interest rate, but I don't have to pay anything out of pocket? What are some suggestions that you can make for them that they're not paying attention to?
I think it really depends on like how much budget you have in this transaction. That kind of matters because when you're buying down points, that kind of increases your out of pocket too. So you will need to talk to your lender and see like how much which would be the most comfortable thing for you to do.
Okay.
Yeah.
Okay. So yeah, also people don't really think about this until they're kind of in the thick of escrow or getting ready to close. The amount of money you have to pay to move into a new place, get the house ready, buy furniture. Sometimes people are willing to pay the higher interest rate and then have the low fees so that they can keep some extra money in their pocket for all of that stuff. And then what statistically happens every couple of years anyhow? Like, how often do people refinance and stuff like that?
So a lot of times people refinance whenever they can, actually.
Okay.
Yeah, so, well, that's actually some of my clients, of course, because when you actually get your get the mortgage at a higher interest rate, normally you can refinance within 6 months.
Okay.
And that's what people do. But statistically, I would say within 2 to 3 years.
Okay, so that's good to know. If you're stuck with a little bit of higher interest rate, you're not stuck with it forever. You can go ahead and refinance in the next 6 months if you wanted to, if the rates are better. Okay, so I hope we answered some of your closing cost questions. Dorothy, if someone wanted to find you, where can they find you at?
They can actually give me a call. My contact number is actually down below here. And also, you can also reach me. I'm also on Facebook, so you can connect with me on Facebook.
Okay, great. And you guys also do free consultations?
Yes, we do free consultation, and we also do free pre-approvals. Our turn time is within 24 hours upon receiving all documentation.
She's pretty fast. Yeah.
So
I hope you guys like this video. Share it with anyone you think that would find this informative. If you want to find more of my videos, you can find me at Kunka Realtor on Twitter, Facebook, Instagram. Thank you so much for watching.
Thank you.